Welcome to AM Best Audio.
AM Best recently revised its outlook on the U.S. Directors and Officers Liability segment to stable from negative. Here to discuss that change is AM Best Senior Financial Analyst Elizabeth Blamble. Elizabeth, welcome. So great to see you. Thank you so much for joining us.
Thank you. I'm glad to be here.
Elizabeth, AM Best has been pointing to soft pricing in this segment for some time. What are you seeing there now?
In the early 2020 to early 2022, we saw some aggressive pricing. We moved the outlook down to negative. Then, in 2025, we started seeing some positive movements. The double-digit rate decreases that we had seen in the past seem to be flattening. Now we're expecting it to be maybe in the low mid digits going through 2026. There's signs of market stabilization. Flat renewals that you're seeing, we're starting to see some more. It's becoming more prevalent. We expect to see more of that going in the future. Even, as I just mentioned, premiums that are going to increase, we don't expect it to be any of the large increases we've been seeing. Capacity still abundant out there. You're still going to have some competition, but you're seeing companies aren't really chasing premium as much as they seem to be looking more at risk selection.
What other factors are underpinning the stable outlook?
The low loss ratios, that seems to be has been characterization of the segment for quite some time now. We did see an uptick in 2025 when you compare it with 2024. However, it's important to note that 2024 was the lowest ratio we'd seen in decades. So, even 2025, I think it's expected to be up 8 points, I think, if I remember correctly. Even with that, it's still expected to remain profitable, and it's still expected to remain well above or well below some of the rates we saw back in 2018 when the soft market was at its deepest point. There's tight, as I mentioned earlier, there's tighter underwriting risk selection. Underwriters are paying more attention to the risks that they're writing. They tend to be a little less into the chasing of the premium. We expect that to continue. There's still, there's still new entrants coming into the market, and we don't expect that to have as big an impact as it has in prior years.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Elizabeth, what stumbling blocks are still out there for D&O writers?
Well, look, the direct loss ratios, they are starting to tick up a little bit. That's something to watch as we move forward. It is expected to still remain profitable. But as I said, we need to watch it. The rising claim severity, we're still seeing claim severity in this space. I think in first half of 2025, the average settlement, according to WTW, was, I think, around 56 million. That's about 12 million higher than what we saw in the same period in 2024 if you adjust for inflation. So that's obviously a big concern. And then we have the emerging risks that we've seen going forward. Cyber's still a main concern within this space. You're still seeing ransomware attacks. These bad actors are getting smarter. They're using AI and all. You see these deep fake videos. So it's something companies need to be aware of and need to be able to protect themselves from. The geopolitical and economic challenges that we're all facing. Companies need to have disclosures around those, and so they need to fully understand what these changes have and how it will affect their company. If they don't fully understand, they could open themselves up to investor litigation, which can be very expensive. And then there's everyone's favorite, artificial intelligence. I mean, the insurance company over the last couple of years is investing heavily in artificial intelligence, using it, to write policies, to, in some cases, some underwriting is being done through that to help with risk selection. Companies need to fully understand it, fully understand how they're using it and what effect it's going to have on their company, and not only how they're using it, but also how their vendors are using it, so they understand it and don't have any investor litigation around that.
Absolutely. Elizabeth, so great to see you. Thank you so much for joining us. Greatly appreciate it.
Thank you.
That was AM Best Senior Financial Analyst Elizabeth Blamble. You can find the full report online at ambest.com. For AM Best TV, I'm Lori Chortis.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.